Hello traders and welcome to our market update video. It's Tonapan here, founder of Master the Markets Illustrates Conference and the Traders Open Day. So here we are on the 12th of June. It's mid of June already at the moment. Today, before we go on to the markets, I just wanted to teach you a topic just like we always do. Then we go to the market update and then we go on to our performance for this week. Right. So let's take a look now in terms of the topic for today. I want to just go through this thing with you on the opening range, okay? There's a lot of purposes for this topic I'm going to teach you. So either can be used for intraday or it can also be used towards end of day as well. Okay, so let's take a look at this. The first of all, the opening range concept was actually talked about by Toby Crable, which actually is a billionaire hedge fund manager at the moment. And now, what is that all about? Now, as you and I know, traders, every day you get an opening price, right? You get an opening price in a bar, and then it does these two things always, which is it will create a nearest extreme to the open, and then it will create a bigger range from the open. So this part here, we call it the smaller range from the open. And then the other part here, which is what we call the bigger range from the open. Now the smaller range from the open is what was popularized as the stretch by Toby Crable. And the bigger range from open is the opposite of the stretch. Now this thing, you're going to get it every single day. So if you go onto a daily chart, you can see that on every bar. So you can see over here, the stretch here is to the bottom, the bigger range to the top. Over here, the stretch is to the top, bigger range is to the bottom. Here you can see on all these bars over here that the stretch is to the top, bigger range is to the bottom. Again, stretch is to the top, bigger range is to the bottom. Okay, so that's what we are having over there. So hopefully you can identify that. Go and quiz yourself as well. Look at this, stretch is so small to the bottom, bigger range to the top. That's the first part. So that's the meaning of the bigger range from the open and the stretch. So you've understood these two concepts, right? So every day, what happens as traders is that every day, the next day, even before this day began, we will have an opening price. We'll have an opening price, isn't it? And that's where the day begins, opening price. Now, from the opening price, where does it create its stretch and where does it create its bigger range from open? So you see, for example, if it creates a stretch to the top, to the bottom, and if you knew that to a 98% probability, now which direction would you take the trade now in? If you knew to a 98% probability that the stretch is to the downside, where would you now take this trade? In which direction? Yes, the answer is to the upside, right? Because now you know the stretch is formed to the bottom, therefore the bigger range open would be to the top side, isn't it? Yeah. Now this principle what I'm teaching you is cross-transferable across any market at all. It doesn't matter whether it's cryptocurrency, whether it's commodity, whether it's indexes, whether it's coffee, it doesn't matter at all. Currencies, it doesn't matter. This principle will stand true. There will always be a smaller side and a bigger range to the other side. Okay. Now let's take a look at this on the intraday time frame and put all this together, and also like how can we now apply it. Now that you know what it is, now let's see how we can apply it. Okay, first of all, you can see that over here is the opening point over here, right? That's the blue line here, right? Now there is a green and a red to either side. Now what is that is what I talked about. So what we put is an equidistance line of the stretch to either the top side or to the bottom side. Okay, so that's what we are doing over here. Now, why is that critical? Now, let me just explain why. So once I do that, if you see, so there's an open here. Now, once I put an equidistance line, now the equidistance line is basically my stretch number, the smaller range from the open, which I average it over 10 days. Okay. If I find out that that is 30 points, so then I create an equidistance line, which is auto-generated by the computer, to the top side and then to the bottom side. 30 points to the top, 30 points to the bottom. Okay, that's the stretch level. Now, the next day, when let's say it crosses that 30 point, whichever side that it crosses to, there's a breakout. That's what's called opening range breakout, which was written by Toby Crable. Then what we are saying is that highly probably this direction here, let's say it went up a little bit towards the top over there, but it didn't break that level here, but then it came back down and it broke this level. All we are saying is that there's a higher probability that this can become the bigger range from the open for the day. Okay, that's all we are saying. That's what the whole concept of this is about. Okay, good. Now that you've understood this, now let's see how you can use this to apply and make money from. Okay, first of all, we need to collect data, right? We need to collect data. What kind of data will you collect? The first question you can ask yourself is that how many times, right? How many times is it when it breaks this either part of the green or the red to the up or to the bottom from the open? How many times is it that when it does that to that direction, does it close higher on the end of the day? How many times does it close higher on the end of the day? The next thing that you can ask yourself is, okay, so now before I give you the next part, let me just explain this one here. Let's collect this data first, okay? So how many times does it, when it breaks out from the upper or the lower range of the stretch, does it then go to close higher? Altogether here, I've just done a very small sample. Over here, we got just 10 days from the 1st of June all the way to the 12th of June, okay? It's just going to be just 10 days only. Right. So now, if you were to look at that over here, now over this 10-day sample, you can see that this one, green, means closed higher, this one closed higher. So what do I mean by that? You see, it broke out first on that upside, and then it went up further and it closed higher than the open, isn't it? That's what I mean by close higher. Again, look, over here, it didn't take out the lower part, it took out the higher part, the stretch to the top side, the bigger range, and therefore it closed higher again. Look where it closed eventually, much higher than the open. Now let's go to the next one here. Now you see this one is a sideways day, isn't it? But you see, when it's doing that, you can see that when it went up higher, it didn't close higher. Again, it closed higher over here. Therefore, you might think that it's a bigger range here, bigger range from the open. But eventually, what happened? It closed lower than the open, so it's a red. So if you keep on doing that over here, again, you see this one is a bit more clearer. So let me just erase all of that. It's much more clearer for you now. Right. So you can see over here that you see this one here closed lower than this. It's a breakout from this point here of the stretch point, right? Now, however, eventually for the end of the day, where did it close? It closed higher than the open. It didn't close below than the open to where it first broke out from. So that's a red over here. So concentrate not on the bottom squares, just on the top squares for now, okay? That's what I'm covering at the moment. I'll come to the bottom squares in a minute. So that's it. So that's what you got over here. So that's what I'm saying, that out of 10, only 5 out of 10 closed higher. Okay, that's just stats collation at the moment. How we apply it, I'll come to it very soon. Now, the bottom squares is asking a different question. What it's saying is that how many times when it broke out from the stretch level, did it also form a bigger range from the open in that direction? So, for example, you see it broke out from here. The bigger range from the open, was it to the top side as well? Let's look. That was about 177. I'm taking from the open, right? Taking from the open all the way to the high. So over here was 178. And then to the bottom is only very little, isn't it? About 1 or 2 pips only, right? So that, of course, that was the bigger range from the open because there's nothing to the bottom side, isn't it? Over here, the same thing as well. You see, from here again, when it broke out, the bigger range is to the upside, isn't it? Because the bottom is only 5 pips, but the top is 121. You see over here, so therefore I'm putting a green. So anytime that it broke out and it made the bigger range in that direction, it's a green. And anytime that it did a breakout, but the bigger range is to the bottom, then it's a red. Over here is a sideway, I just put it red. But if you just really want to get quantitative, you can measure it out. It's about 34 pips bigger range, 26 pips to the bottom. So actually technically you can say that's a green, but I just put it as red. Now over here again, the breakout was to the bottom. Does it do the bigger range to the bottom then? To the bottom all the way from the open is 73. Over here all the way to the top is 59. So the bigger range was to the bottom. This was green and this is green again. This is green. Now look at this, right? Even though it did close higher, but once it broke out to the bottom, from the open, it's 90. To the top, it's only 20. Again, bigger range is to the bottom in direction of the breakout. Now, if I were to collect all these data traders, so how many of them out of a data sample of 10, how many of them close? How many of them do a bigger range, sorry, not bigger range from the open in the direction that they break out? Okay, in the direction that they break out. So how many of them close? How many of them do a bigger range from the open in the direction that they break out? So how many is that out of a 10? You can see all of them is about 9 of them. Look at the big difference of the statistics, isn't it? 5 to 9. So they all, most of them, in fact, if you want to get quantitative, actually it's 10 out of 10 is 100%. If I also include the sideway market. But then I've just not included that, so it's just 9 out of 10. Okay. So in that case, now if we know how to collect the stats, that's all good. So we've got two types of stats. This stats over here, 50% is where it's saying that, okay, how many times does it close higher when it breaks out from the stretch range, okay? It's only 5 out of 10. How many of them do a bigger range from the open when they break out from the stretch range? Is 9 out of 10, 90%. So let's put all that. Now, how do we apply it? Now, I'm just going to give you a simple idea. In terms of intraday, you see over here, you see from the open, right? Where did it break out to in the beginning and close below? Not this one here, because you see it went down, but it closed above, right? Here, look, it closed above, isn't it? Over here. This is the first point where it broke out and it closed above. Now, that is your first breakout point. Now, from the breakout point traders, is that at the moment, is it going to do a bigger range from the open? You see, take a look now. That's 57 pips compared to 52 pips over here. No, sorry, we got to take it from the open, right? So from the open, it's 28 pips. To here, it's 81 pips. At the moment, it's a bigger range from the open. Okay, it's a bigger range from the open to the upside. You could have taken your profits and you could have gotten out wherever how you trail your stop and how you exit. That's where the money is made. Now, is this now going to continue further down and take out this low and do all that? And how much is it going to do by? A critical question that will help you, that is the range of the day. The range of the day, let's see, let me just not put it in there. Let me go on to the daily. If I do an average true range is about 121, isn't it? 121 pips. Now, 121 pips, see from the bottom to the top today is on 107. Now, if it were to close lower today and take out that low and go further down, so let's take a look. How much does it got to do? It's already done 107. It's just got to do 14 more pips. So what we are saying is that if it does take out the low, it will do 14 more pips to the bottom and then it will make that range like that. But our bigger range from open will still be to the upside, because even if it did 14 more pips, it's only 31, so the bigger range is still there. So one way that you can definitely make your profits from is a short way that the statistics is showing very strong way. It's the direction in which it breaks out from is usually the BRO, the bigger range from the open. Now your homework is, where do you exit? How do you exit to capitalize on your cash? Okay, that's what you got to find out now. I'll leave that as a homework for you guys, but this is a very large work in terms of your intraday trading. And how do you apply that to end of day trading as well? You can use all this bigger range and smaller range from open in terms of your stop loss management as well. This figure can help you towards that, and also where you enter on the daily chart will help you a lot too. Okay, great. I think that's pretty much that on me on the topic for today. I'll go on to our market update profile here. Market update profile over here. Dollar Swiss, what do we have today? Open equity diminishing to the bottom. So we can expect a bit of reversal, even though I don't expect this to become the reversal point, maybe for this to fail and then another one to come. Let's see. But how we get our profits and how we scale out is very important. We are on this on Moneybar 2.0. We can maybe scale out a little bit over here on the first position here. Now, in terms of this one here, dollar yen, where is the open equity towards? It's still an uptrend. Will this carry on further up and continue in its momentum towards its trend direction? Is open equity diminishing? This is what we call a first interruption, highly lowly probable. First interruption usually turns. I would expect this to fail. So let's see how that goes. GBP USD, uptrend. Yes, momentum is coming off down. Let's see if that confirms today the top. Euro dollar, what do we have over here? Again, it's coming off the top again. Open equity to the upside is diminishing, so I would expect a bit more downside. Aussie dollar, yes, to the downside as well. But this is not very that clear because the momentum is still quite strong towards the upside. It is slowing down. You can see all the closes slowing down. So either way, but I'll see how it confirms and take it on from the smart money indicator signal when it confirms the top. So this is not very clear yet. It can take out the high, and then after that do another signal to the bottom, and that's when I think that would be a strong signal to come to take to the short side. Euro yen, open equity, I would still say to the downside. First interruption here. Bitcoin, open equity to the downside still. There's a lot more move to the downside still, I would say. Here again, oil. We got the confirmation bar here. I would still say open equity to the downside, so we'll see how that carries on to be. Gold, open equity more to the upside, I would say. FTSE, open equity to the bottom. Dow, open equity to the bottom. Uptrend still before it turns around. S&P, big drop yesterday. Is this a bit of small bounce here, profit taking here? We'll see, but I would expect a bit more down move before it continue on with the trend. So let's see how that carries on to be. I think that's pretty much that. So yeah, been just to take a look. Uptrend, still open equity towards the upside, I would say. Wheat is coming further down, and I would say open equity still to the downside. Wait for this low to be taken out before it turns around. Alright, so that's what I would say in terms of the market update analysis. In terms of our performance for this week, in terms of our elite room, as we can see over here, swing profit took a little bit of a two hits over here, minus 1.77 and minus 1 and 0.77. This one has been not updated correctly. Okay, that's fine. So minus 1 and 0.77 is what we are looking at. Minus 1.77 on swing profit system. On the elite room, that's the only ones that we've took so far this week. Minus 1.77%. In terms of cash in 4.0, in terms of the LTR from the elite signals that we are giving out from. So if I take a look over here, right? So you can see that, let's see over here, right? So over here we can see that these two positions that we have taken in a 3 position split, right, is what we're doing. So I'll take that off the elite journal. So if you take a look at CI 4.07, it's 1.17%. Okay, so the LTR has made C 4.0 has made 1.17% in terms of the live trading room. Okay, right. So if you add both of that up together, small drawdown of minus 0.60% is what we got overall for this week. Very small, tiny drawdown. Let's wait for bigger moves to come in and then position ourselves. Okay, keep your losses always small so that when the big monster runs come, then you can overwrite the losses really easily. Okay, that's what I would say. Okay, so a bit of things to digest over here on this video, so do take a look at it and see and revisit it quite a few times on how we can apply these principles on any market going forward. Alright, I guess that's pretty much that from me for now, and as we always say till next time, stay disciplined, follow your trading plan, and keep trading like a master.